Well, let's practice some real estate questions for your real estate exam. National questions, and then at the end, we'll do some Texas real estate questions. So remember to participate because this is the class designed for you to answer questions by typing the question number and the letter answer. I'll give you an opportunity after I review the question. So come on and participate. This is a time for you to practice in addition to studying on your own. So I'll do about 10 national questions at the beginning, or maybe 15, and then Texas state questions towards the end. So this is Lillie Handy Dominguez coming to you from San Antonio, Texas, and helping all of you prepare for your real estate exam. All right, so here we go. And we're continuing from I left off. On the description, you will see that I tell you where to continue in a prior video. So I do it consecutively. The national, it's been probably a couple of months since I haven't done national. And Texas was a couple weeks ago or so. So just look at the description. If you happen to have the book, then you can follow along. All right. And anytime, go ahead and ask questions. Hi, Yvette or Yeti. You passed your national. I'll be taking the state next week, hopefully. All right. We'll be covering some state questions towards the end, maybe in about 45 minutes or so, if you're wanting to come back. If not, hey, hang in there with us. So congratulations. That's exciting. All right. So on this topic here, so let me show you, in case those of you that do not have the book and this is your first time joining me on our live prep class. Okay. Hold on here. The book that we're using, and it's also available in, I don't know, about 26 or 27 states from the same author, Texas Real Estate License Exam Prep. And it has a little bit of review preparing you for the exam, review on what real estate is about, review on all the topics that you've studied on all the courses. And then it has national questions and answers and state questions and the answers. The answers are at the end, they're not right after the questions. I love these books and others similar to it. However, I have permission to use this one on YouTube because of the fact that it has questions and explains the answers. So there's a link on this should you happen to want to purchase the book, and it's through Amazon. And of course, I will get credit. So today we are reviewing on the national questions. Oops, hold on here. Let me go to the exam. So you see all of these are the sections that you actually took courses on. So it has 10 sections and tests, the national review, the math cram cards, and then Texas law and regulation. Then it goes into the tests. And today we're doing test number 7. Number 7 deals with finance. Okay, so think mentally about finance and relax, be comfortable and enjoy. Get yourself some water, coffee, or whatever you enjoy drinking at night. And we will go back to where I was. Okay, so we're starting out with question number 14. Again, finance, right? Yes. And I do adjust the screen so for individuals that are watching it on their phone, they're able to see it. Okay, a loan applicant has an annual gross income of $72,000. So what kind of an income? Annual gross income. Okay, so it is the gross. It's not after the deductions. So it's not the net. It's not after taking out Social Security, taxes, or any insurance. So this is a loan applicant. How much will a lender allow the applicant to pay for monthly housing expense to qualify for a loan if the lender uses an income ratio of 28%? So the income ratio that the lender is using is 28%. And so this helps determine, what kind of expenses or loans that that buyer can have. So how much is the lender going to allow the applicant to pay for monthly expenses? So those are all other, if you own a car, housing expenses, all that type of thing. That's what's covered in the 28%. So how much will that 28% cover? So again, annual gross income. So you've got to calculate, okay, that in a year, right, you have 12 months. So it's going to take a couple of steps. So because it says here we are given the annual gross income, and then the question is, what will the applicant pay monthly housing expense? So we've got to go from yearly to monthly in order to be able to calculate it. So we first have to do 72,000. Okay, let me see if I can get a sometimes it gives me a board to use here, but I can't. Okay, so 72,000 divided by 12, right? Because there's 12 months in a year. So you first divide that. So what is 72,000 divided by 12? Is what you want to calculate. And gosh, I'm sorry. I should have something to write on this board. So let me do 72 by 12. If you have a calculator, so divide 72,000 by 12. So that's going to give us 6,000, right? Now you have the monthly income. So 6,000, and what's the income ratio? 28% that the lender is going to allow for that buyer to have in order to be qualified. So now we're going to multiply by 0.28. Your calculator may just be 28 and then times, right? Or 28%. So the answer would be what? Is it A, 2160, B, 1680, C, 1068, or D, 840? So did anyone try to calculate that? So I'll give you a moment to decide on there. If not, I will post the answer. And thanks for joining us today, all right? Because this is for you to help you pass those exams. I say those exams because in Texas, we have two, national and Texas. In some states, it's all combined, okay? They only have one exam. So the national and the state is included. However, in Texas, we have a national portion, and which has, what do we have? 80 questions. And then we have 85 questions. And then we have a state portion that has 40 questions. All right. So Yvette, Yeti says number A, the letter A, I'm sorry. So no, that's not it. So we've got 6,000. Multiply 6,000. Okay, that's the income. So let's say you're thinking about it in your head. So 6,000, half of that would be 50%, right? Is 3,000. Another half of that would be 1,500. So 25% would be 1,500, and it's 28%. So it's going to be a little bit more than 1,500. So yes, you changed your answer to B, and the correct answer is B, 1,680. So 714B. Very good, Yeti. Well, thanks for hanging in there, even though you already passed the national exam. And I'm actually live on YouTube, AgentPrep, and also on the Facebook page, AgentPrep Real Estate Exam private group. So in case anyone's watching on Facebook, however, I would love for all of you to be watching on YouTube, right? Keep pressing, I pass. All right, look at this. Kamanani passed, and she actually, I believe, joined EXP out in the Houston area. So fantastic. Congratulations. So yes, look, Kamanani, Yeti says she passed. And I think Yeti is a young lady. And we'll be taking the state next week. So thank you for the encouragement. Okay. So next question, number 15. This is a little bit longer. So AMC Bank discovers, in considering buyer Bob's application for a mortgage loan, that Bob has borrowed the down payment from an uncle and has to pay that loan. Bob should expect that AMC Bank will do what? So a lot of times banks don't like you to borrow money, but there are exceptions, especially if you have to pay it back. Now that goes into your debt to income ratio. So what would Bob expect from the bank? A, refuse the application. B, adjust the applicant's debt ratio calculation and lower the loan amount. C, increase the loan amount to enable the borrower to pay off the loan to the relative. Or D, require the borrower to make payments to an escrow account for repayment of the relative's loan. So think about it. You studied about this. These are finance questions. Okay. So if your loans and debts that you owe are higher than the 28% we saw in the prior question, then what do you think the lender is going to do? Approve it, reduce the amount that they loan them, give them more, keep money to pay to have them pay the relative's loan? So what do you think? If you own a house and you have a mortgage or things like that, you might have experience with this. But if not, we've got to think about it logically, that if we have too much debt, lender may not loan as much the money that they first applied for. So any guesses or anyone know the answer? Thank you, Kamanani, for the congratulations to Yeti. That's awesome. This always helps to have encouragement and support. Okay, the answer here is 715B, which is, since they borrowed money for the down payment from an uncle, the lender, it's going to cause their debt to income ratio probably to go higher. So the lender will adjust the applicant's debt ratio calculation and lower the loan amount. Therefore, now they have to buy a smaller house, or not necessarily smaller, less expensive. Very good, Yeti. Okay, number 16. Okay. See if I can get it all on one page. Yeah, there we go. The Federal Reserve's Regulation Z applies to which loans? So remember, so here, these are vocabularies, right? Things that we need to know. Regulation Z, it's referred to probably in different places in your courses and your financing. So it applies to all loans? A, B, all loans secured by real estate? C, all loans secured by a residence, or all loans over 25,000. Which do you believe the answer for that is? Oh, and you know what? I'll also read the answers from the book in case you're following along with the book. Type your answer in the chat. Include the question number and the letter answer so that we're all on the same page. And I don't mean on the same page on the book, but on the same, question. No, it is not B, Yeti. It is actually secured by a residence. Federal Reserve's Regulation Z applies to residential loans. So the answer says Regulation Z to all loans secured by a residence. It does not apply to commercial loans or to agriculture loans. Those are different types of loans over 25,000. So the loan for residential is over 25,000. Its provisions cover the disclosure of costs, the right to rescind the credit transaction, advertising credit offers, and penalties for non-compliance with the act. Okay, because some lenders will advertise, right, and say, hey, we'll finance, any type of loan with this type of interest rate. Well, the lender has to disclose the annual percentage rate, which also includes the closing cost that would be amortized over the whole 30 years or whatever term that loan is. So closing costs, the interest rate that a loan actually is offered to a borrower is different than the actual annual percentage rate. The annual percentage rate includes certain closing costs. And so the actual interest rate, when individuals are comparing loans, they want to know both. We can find out the current interest rate in the on bankrate.com or other banks that we have, or Google it. Okay, there's so many sites on there that will have that. And it'll ask you what state you're in, because every state is a little bit different. So the answer here was what? 716C, residence, right? Because real estate, it could be commercial, agriculture, industrial, okay? So it could be different types of loans, but in this case, it's only those secured by a residence. Did you get that, Yeti? It'll help you continue learning when you end up getting your license and representing clients. So a lot of times it's good to keep listening to information, because you're going to take additional training and continued education. Like my license is due to expire at the end of November, because that's when I passed my exam. So I'm having to do now renew my license. So dual credits, continuing education, which is 18 credit hours. And out of those 18 credit hours, we'll take Legal Update 1 and Legal Update 2, which are, dang, that's not working very well here. Okay, might have to end up being small. So Legal Update 1 and Legal Update 2, each are 4 hours, so that totals 8. And then they recommend we take contract, so that's another, I think, 3 or 4. And then we have some electives. Okay, so that's later, okay? When you're going to renew your first year, for those of you that this is your first time of getting your license, your first year, you're going to have to do the first 2 years an additional 90 hours, okay, in addition to Legal Update 1 and 2. All right, number 17. If a particular loan falls under Regulation Z's right of rescission provision. Sorry for the background noise. I'm dog sitting, and my kitty cat and dog are getting impatient. So if a particular loan falls under Regulation Z's right of rescission provision, rescission, the lender can pull it back. A, the lender has the right, or the buyer can cancel. A, the lender has the right to change the terms of the loan within a certain period. B, the lender has the right to accelerate repayment of the loan because of a change in the borrower's credit status. C, the borrower has the right to pay off the loan ahead of schedule with no penalty. Or D, the borrower has a limited time to cancel the transaction within a certain period. So this is the right of rescission provision, because a lot of transactions don't go through, right? Something falls apart. The survey, the inspections, and the appraisal, everything has to be met when there is a loan involved. So if you're not familiar with Regulation D, I recommend, instead of going back to your books, if you have a, um, a review book like the one that I use here, then just go into the review section and look up Regulation Z in the vocabulary or Google it. Okay, because it's under the vocabulary, Regulation Z. But it'll be in the description of that concept. It'll give you more detail. Menus channel. Hi. Okay, so you type D. Bailey, relax. So the answer is D. The borrower has a limited time to cancel the transaction within a certain period. So lenders will give a pre-approval letter and they'll say, okay, you have 90 days. If that expires, they'll have to redo it. However, when a buyer writes a contract, an offer to a seller, then there's a provision on there as to how many days do they need to get final pre-approval, or they decide they want to cancel, terminate because of the inspection, of the survey, then they have a right to rescind that loan request. So very good, those of you that type 17D. So let's see what the answer here says. So the borrower has a limited right to cancel the transaction within a certain period. A borrower has a limited, has a limited right to cancel the credit, usually within 3 days of completion of the transaction. The right of rescission does not apply to residential mortgage transactions. That is, to mortgage loans that used to finance the purchase or construction of the borrower's primary residence. It does, however, apply to refinancing of mortgage loans and to home equity loans. So if you're not familiar with what home equity loans, they're called HELOCs, HELOC. You want to go back to vocabulary and review that, and refinancing a mortgage. So those are different. They also have closing costs, not as much as a new construction or a purchasing of a home. So state laws may require a rescission period and notice on first mortgage loan transactions as well. Okay, so you see, this is one of the reasons I love these books, because of how they explain the answers. Otherwise, you'd have to go back into those thick books that we studied to look for the answer. And of course, we have now the use of Google, right? Lots of information on Google, and you Google it you search on YouTube, and you'll probably also get the answer, because so many of us are doing videos on these topics. So when you're studying and preparing for your exam, I'm just one source that you want to use. There's prep books, there's prep schools. Okay, there are other YouTube channels. So there's a variety. Find what best suits you with your learning method. Some individuals are visual, they got to see it in a book, or they've got to see it on YouTube. Other people are listeners, they're audio, they learn audible, and they can listen just to the information. I am visual, I've got to see it. So choose whichever one helps. Now, if you're driving and you can listen, hey, do that, but make sure you focus on your driving, because you can learn while you're doing other activities that don't distract you from your focus. The best thing is to have a central area that you can study every day. Do it every day for at least an hour. Study vocabulary and then study questions. Every single day at the same time. Let your family know to provide you with support. You've got to have a good schedule and keep doing it until you pass your exams. And we're never going to know everything and expect perfection. So please don't do that to yourself. Okay, you're making it difficult, and it's normal to get nervous and scared. All right, number 18. Under the Equal Credit Opportunity Act. So what kind of act? Equal Credit, not Equal Employment Opportunity Act. Equal Credit Opportunity Act, a lender or a real estate agent who assists a seller in qualifying a potential loan, in qualifying a potential buyer may not do what? So Equal Credit Opportunity Act. A lender or a real estate agent who assists a seller in qualifying a potential buyer. Okay, so let's say I represent the seller. Now I'm gonna get calls from buyers, right? And I've got to pre-qualify them. Realtors that are buyer agents, they're going to pre-qualify them. However, we representing the seller, we still need to be careful and review everything. Make sure all our requirements are met, that they're pre-approved. So what may they not do under the Equal Credit Opportunity Act? A, tell a rejected loan applicant that the reasons for the rejection. B, ask the borrower about his or her religion or national origin. C, ask the buyer or borrower to explain unconventional sources of income. Or D, use a credit report that has not been provided to the borrower. So type the question number and the letter answer. Okay, so I've got, hi Naz, thank you for joining us. And yet today I started a little bit later because when I'm doing it early, oh my gosh, I have so much internet interruptions. So we've got BBB as in boy. And I think everybody has answered, and that is correct. 718 is B. Ask the borrower about his or her religion or national origin. That may not be asked. That has nothing to do with their credibility, financial credibility. All right, so very good. You are all on the ball. Awesome. And for those of you that are watching on YouTube, hey, remember to press that thumbs up, okay? And send me some love and support so that I can continue to do these more frequently. Okay, number 20. Oh no, number 19, pardon me. And if you ever see me get out of place, please let me know, all right? You're here to also help me and make sure I stay on check, right? And sometimes I do answer something incorrectly because I'm thinking one thing and saying another. So make sure you question me if you ever notice that. It has happened. Number 19, a conventional mortgage loan. What kind of mortgage loan? Conventional mortgage loan. So a lot of these are vocabulary. That's why I stress study vocabulary every day. So a conventional mortgage loan is one that is what? A, backed by the Federal National Mortgage Association. B, insured under Section 203B of the Federal Housing Administration Loan Program. C, guaranteed by the Government National Mortgage Association. Or D, not FHA insured or VA guaranteed. So here we go, right? Knowing your vocabulary. If you don't know all the concept about financing, by knowing the vocabulary, you'll know a lot of the answers to these questions, because on the vocabulary section, they'll have Federal National Mortgage Association, Government National Mortgage Association, FHA, VA, all that will be explained. All right, so wow, everybody's on a roll. So Menu, Naz, and Yeti, yes, the answer is D, 719D. So conventional loan, mortgage loan is not FHA insured or VA guaranteed. Can anyone answer which, if FHA is, well, it's telling you there, not FHA insured. So the FHA loans are insured, VA loans are guaranteed, right? And if you're not sure of the difference, then it's time to go and review that. So the VA guaranteed are for veterans, right? Military individuals. And well, you don't have to be retired veteran, okay? You can be an active vet. And then the FHA is for anyone else that only has like 3.5% to put down. They want to put less down than a conventional loan. Conventional loans used to require up to 20% down. During COVID, and I think prior, they changed that and made it a minimum of 5% down payment. Still, 5% versus 3.5% can make a lot of difference to some individuals. Some individuals really struggle getting also the down payment. So FHA keeps it down to 3.5% down payment plus their closing costs, which a lot of times they can ask the seller for it. And the VA guaranteed is they guarantee 100%. So the veteran doesn't have to put any money down. They get 100% loan. Sometimes they may put a little bit because in this case, sellers have to be educated that they will end up contributing a lot towards the buyer's closing costs. So that is a guaranteed loan. The other is insured. So very good on your answers. Let me see if there's anything else different. Yeah, so Federal National Mortgage Association, does anybody know the acronym for that? I usually ask. And then the acronym for Government National Mortgage Association, if you do, type it in the chat. So you want to learn those acronyms because the questions sometimes they don't spell it all out. They give you an acronym. And if the acronym is in the wrong order, then you're going to miss the question. Yes, Fannie Mae and Ginnie Mae, right? So Fannie Mae Federal Housing Administration loan and the government national loan is Ginnie Mae, GNMA. So the acronyms are FNMA and GMNA. I'm sorry, Government National. See how easy it is to, yes, you got it. Awesome. Ginnie Mae and Fannie Mae. Okay, very good. So it didn't say anything different than what I said. All right, number 20. The assumability. What is assumability? What is to assume of an FHA loan? Okay, so FHA is the acronym, right? For Federal Housing Administration. Know that. So assumability of an FHA insured loan is A, unrestricted, B, limited by when the loan was originated, C, limited to owner-occupied properties, or D, prohibited on all existing loans under current regulations. Okay, I'll go back and answer the question, Naz. All right, so I've got 720B. Anybody else? All right, so I've got B, B. And the answer is Anybody else? There's a third person on here. So the answer is B. Is limited by when the loan was originated. Because, you know, the lenders, FHA, Federal Housing Administration, has a lot of rules, a lot of laws that they follow. And so that is a requirement. Not all FHA loans are assumable. Hi, Anna. Nice to see you. Welcome back. Okay, and then I'll go back and answer the question. Make sure you're always checking to make sure I type the right answer on YouTube and Facebook. Okay, so let me go back to Naz. So Naz, the difference between what? Fannie Mae and Ginnie Mae? Is that what you were asking? Or FHA and VA? Because that was on the prior question. So I'm thinking you may have been asking the difference between Fannie Mae and Ginnie Mae. Okay, so the big difference with Ginnie Mae is government, okay, and Fannie Mae is that the Ginnie Mae is owned by the government. It is part of the Department of Housing and Urban Development. Fannie Mae and its sibling, which there's another one, Freddie Mac, are private corporations, okay, owned by shareholders. Okay, and the other thing about FHA is you'll typically see this section 203B. Those are typically the type of FHA loans that are provided. If it is there are some that will provide rehabbing. So that's a little bit type of different. That would have a different number. I forget that one. It's not very commonly used. It takes a little bit longer. Okay, so Ginnie Mae is government. Okay, and the Fannie Mae, okay, and Freddie Mac are private corporations. So whenever you see government, okay, that gives you a clue. Others are private. Okay, did I answer that? And you can Google it really quick when you have a question and you don't have anyone to answer. Hey, don't go research in books, just Google it. And if one answer doesn't give you something that doesn't explain it the way that you understand, go and keep searching for it. Usually they'll show you on Google. People also ask the question in this way. Okay, what's the difference between Fannie Mae, Freddie Mac? What is Ginnie Mae? What is Freddie Mac? What is Fannie Mae? So go to a question, okay, that will explain it. Just that'll make it easier. I do that, okay, so that I understand it. You're very welcome. All right. So now we're on number 20. No. Yeah, we answered number 20. Assumability of an FHA loan and what's assumable. Assumable means that the lender will allow a new approved buyer to purchase a home that has a loan with them already. And they'll take over the current loan from the current owner, but the buyer has to be approved by FHA. So that buyer, that new buyer that's going to buy the seller's home, okay, will assume the current loan. So that's why it depends on when it was originated. And I'm not sure what the limit is. Okay, if you ask me right now, so what is that limit of years? Okay, I don't know that answer. I would have to Google it. Okay, number 21, but that would be a good answer to ask. I mean, a good question to ask. I haven't seen that type of question being asked, except for like the one that we just saw. If I go larger, okay, so I'm gonna have to go a little smaller. All right, number 21. Well, I should be able to make it larger. Why won't it stay on one page? There we go. All right, 21. So did I show the answer for 20B in case those are rewatching? And anybody that's watching the replay, hey, you know, you can fast forward on the lower screen of your YouTube screen. You move your cursor and you'll see a gear, okay, the settings, and it'll allow you to select a faster speed, because I do allow students to participate during the class. So I don't just do read the question and the answer. I go through and explain and allow students to ask questions. So if you're doing a rewatch, replay, fast forward. I do that all the time with videos that I watch. I put them at 1.5 times as long as I can understand the speaker and their dialect is good and their articulation. Okay, 21. A VA, what is? Veteran Administration Certificate. So a Veteran Administration Certificate of eligibility determines. If you don't know what that is, go look it up in your vocabularies. So the certificate eligible determines what? A, how long an individual served in the military. B, the maximum loan amount an approved lender can give to veterans. C, how much of a loan the VA will guarantee. Or D, whether a lender is approved to issue VA guaranteed loans. So what is the question asking? A VA certificate of eligibility. Who has to become eligible before they can get a loan? Veterans, right? Okay, I'll get back to you in a moment, Yeti. All right, Anna, you said D. No, it is not D. Because it's not the lender getting approved, it's the borrower. So a VA certificate of eligibility determines what? C, how much of a loan the VA will guarantee. So the VA will look at the person's time in the military, probably their level, their status, to determine, their income, to determine what they would approve them for, because the VA guarantees what? 100%. So 20. Did I show? I did. Okay. Okay, so did everybody get a chance to answer? So how much of a loan the VA will guarantee? Okay, they guarantee 100%. Okay, a veteran must apply for a certificate of eligibility to find out how much the VA will guarantee in a particular situation. So if the house that they're buying is, 50,000 over what the VA will guarantee, they can still buy that property. However, they will have to make the difference. Okay. VA will only guarantee a certain amount that they qualify for through VA, through their requirements. So there's a difference of eligibility, the eligibility to VA and the eligibility through the lender. But the lender is a pre-approval, which they could approve for higher amount, but that doesn't mean the Veterans Administration is going to guarantee it 100%. They'll only guarantee the percentage that falls within their system in their qualifying process. Okay, so let's see what question I have here from Yeti. Okay, it's taking a little bit of time. So whenever you get a chance, I have this question. I have come across it twice in my exam. How much can you rebate a principal? And the option states are $50 and there is no limit. Okay, I'm not understanding. We don't normally call it a rebate, okay? Whenever we're helping a seller, if we want to help a seller or a buyer to close a transaction, we can reduce our commission. And that's how we can contribute to help a seller or a buyer or pay for some other expense. A gift to someone, okay, or to the seller or to someone else can be $50, okay, like for a referral or something like that. If we're buying a gift to a client that bought a very expensive home, your gift can be higher. It could be something, not cash, all right? It can be a, room decoration, some furniture, a grill. There's different gifts that you can buy, real quality wine. Some of those gifts are going to be more than $50. But when we're providing a gift to someone else other than our client, okay, then it's a $50 limit and it has to be a department store credit card, not a cash card. Okay, a restaurant card or that. So I'm not sure what you mean by the option states $50 and there is no limit. I don't get that part. It's not at least I don't know it as a rebate to our client. We can help them in the closing process by contributing a portion of our commission or reducing our commission. And sometimes both agents will do that to help the transaction close. Like, let's say I pay for the, during the listing period, I pay for a home warranty. So if something goes wrong during the listing period, the water heater goes out, the fridge, or something else like that that's covered by a home warranty, I pay the $85 and I ask them to contribute a whole year of home warranty to the buyers. So that if something falls apart, appliances, electrical fixtures, or plumbing fixtures, then it'll be covered by the home warranty. And it's something that the buyer can't come back and say, oh, you didn't tell me this wasn't working. Well, it was working at the time, but it malfunctioned afterwards. So that's the option in the exam. So I have some across. How much can you rebate a principal? And the option states are 50 and there is no limit. Oh, you mean the answers it gives you are $50 and there is no limit. So it has to be during the closing period, and it has to be like a contribution. So let's say we're charging 3% commission. So, and we want to reduce our commission by 1%. So 1% of a $500,000 home, okay, would be what? 5,000, right? Or yes, because $1 million home at 3% would be 30,000. So we can reduce our commission and to help the sellers close. But typically, if you want to, it has to be done during the closing process so that it's on the settlement statement and it's disclosed. If it's, and that's a what we contribute, okay, during the closing period in order to help the client, and we're willing to give up some of our commission. Okay, I don't use it as a rebate. I use it as a commission reduction to help them close. And the other option says $50. I would say, under that consideration, I would say it depends on what the property value is. Okay, I might go with $50, but I know it's more than that. okay, because I have contributed more than $50 to my client, to my principal, if it's during the closing process. So your question doesn't completely cover everything exactly. So you gave me part of it. You know, what did the question provide? And what were the other answers? Because you're going to have 4 different options, right? And a multiple choice question. I don't like the rebate issue because we don't really use as a rebate. We call it a contribution. But a rebate, you're giving back, right? And we can give back during the closing, but not afterwards. So we cannot give money back to a seller or to a buyer after a closing. That's illegal. If we do it, that's between you and them. That is not ethical. That is not legal. We can buy a gift, okay? And there's really no limit on that. There's only a certain percentage we can write off for IRS. So it can depend. So I'm sorry if that doesn't cover your question completely. Well, you know what? Let me just do a Google here. But let me see, how much can a realtor pay? So bear with me, okay? A principal. And I'm not sure if asking. So let me see here. Our real estate commission rebates legal in Texas? Absolutely. Okay. So we usually take it from our commission. So it says absolutely rebates are legal in Texas and in many other states across the country. Many people inaccurately assume that there is a catch or that they will get in trouble or other things associated with rebates. This is totally not true. Per the Department of Justice, rebates are 100% legal in the state of Texas. Okay, so we're contributing, okay, to our client. But it doesn't say here, you know, what percentage or whether there's a limit on here. So you might want to just Google that. But yes, a rebate is a contribution to a client. Assume you're a broker. I'm trying to see if I can find something that quickly says if there's a limit. You know, another place to also look at it, TREC has a lot of questions that are provided in the Texas Real Estate Commission website. And there are a lot of questions and answers on there. They don't give you multiple choice. They just ask the question and then they answer it. I highly recommend that you go in there. Let me see here. Section 14. Okay, I'm not seeing there's a limit, okay? But rebates contributing to our client is illegal. Assume that there's a catch. It's not a catch, okay? So a lot of times we say, well, I thought we could only give $50. That's different, okay? Here, we're doing it in a transaction because it says paying a principal. The client is our principal during a transaction. Once the transaction ends, then the agency relationship ends. They are no longer our principal. So that's a key word to pay attention to. So what does it mean when we're providing a rebate to a principal? It's during the listing period and the closing period, okay, that we decide, okay, we're going to reduce our commission. And so those rebates are taken from our commission that our sellers are going to contribute to us, pay to us for our service, or that a buyer is going to pay if a for sale by owner does not want to pay commission. Okay, does that help you a little bit? The key word on there. So when does it happen? When they use the word principal, it's during the agency relationship. And when do we have an agency relationship? When we have a legally signed document between the brokerage and the client being the principal, either a buyer or a seller. Once we're under contract for a sale, so there are still our principal. The buyer has their principal, seller has the listing agent has their principal. I'm sorry. The principal seller is with a listing agent. The principal buyer is with a buyer agent. If there's only one agent involved in Texas, we cannot represent both. Then we only represent the seller, the listing side. The buyer, we recommend that they get their own realtor to represent them, or we will write the contract for them and facilitate the closing. We cannot advise them or guide them or negotiate for the client, that the person that we do not represent. Okay, so you get it? Principal during an agency relationship. Okay, so based on that, actually, I would say there's no limit, all right? Because let's say we have a principal seller that has done a lot of business with us, and we decide we're not going to charge them commission on this transaction because we've already capped with our broker. Then it's up to us whether we want to charge commission or not. So we might say, okay, we're going to charge you 3%. And then the process says, you know what? I'm going to rebate you by not charging you the 3%. Okay. So I'm reducing the commission because it comes out of our commission. So, and actually it says, so yes, a real estate broker can pay a rebate to the tenant provided that there is a written consent of all parties. So that's another thing. So that's talking about tenants, okay, and not a seller. So anytime there's a bilateral contract, okay, there has to be consent by all parties. If it's unilateral, that's a listing agreement. Okay, that's considered unilateral. It's a bilateral contract between the brokerage and the client. During the contract that is already in escrow, there's one period where it is a unilateral contract, right? What is that? One-sided. Only the buyer has to make a decision. During the option period, the seller has to wait for the 10 days, 5 days, 7 days, whatever the buyer requested for as an option period, and they pay an option fee. During that period, it is called the period of the contract. It is called a unilateral contract. Otherwise, they are bilateral. Bye. Okay, so let me see what else. So it says, the way I understand it was, what will determine if they get it or not, like the proof they were in the military? Oh, you're talking about the VA certificate? Because that doesn't have to do with the, that's for VA eligibility, not for the rebate. At least I'm not aware about that, okay? Because rebates can be done with any client, any principal, okay? All right, that's the option in the exam. Okay, so that's what you saw in the exam. Okay, number 22. I hope that helped. If not, you can Google it a little bit more and see what you find out with the laws in Texas. All right, number 22. What question did we start with? Because pretty soon we need to go into Texas state questions. We started with 714. 22. Okay, we've got 3 more questions to go. All right, number 22. A borrower obtains a 30-year fully amortized mortgage loan. How many years? 30 years. What kind of amortization? Fully amortized. So it's going to be amortized to show a monthly payment every month for 30 years, 360 months. And the loan was of $50,000 at 8% interest. What is the principal balance at the end of the loan term? A, 2,000, B, 50,000, C, 220, or D, 0, not 220,000, 220. So remember to type the question number and the letter answer. Yes, you've been doing well. Okay, any answer? Anybody taking a chance here? Oh, so I was right. There is no limit. I'll go back. So let's answer this question. So the answer here is 0. So it says the loan of 50,000 at 8% interest is being amortized for 30 years. When it says amortized, that means that they're paying principal and interest. It's not an interest-only loan. Okay? So by the end of 30 years, the loan will be 0. Oh, you guys had answered. I didn't scroll down. Oh, I keep forgetting. I need to D. Okay, so I did another search. So it says here, a rebate is part of a license holder's commission. Okay, so I'm a license holder. It's part of my commission that the license holder gives to a principal in a transaction in which the license holder represents one of the parties. So I represent one of the parties, right? That's all we can represent in Texas, one-sided. A rebate can be cash because in the transaction, it's not a listing agreement, okay? It is a transaction, which is already between a buyer and a seller. We can contribute our commission, which is actually cash reducing what they, increasing what they're gonna get if it's a seller, or reducing the amount the buyer is going to get. We're not giving them like cash after the transaction. It is during the transaction, okay? Understand that. We cannot hand out cash after. It has to be done during the transaction that we reduce our commission. A rebate can be cash or anything of value, and there is no limit on the amount of rebate paid to a principal of the transaction. So if we want to contribute more, that is up to us. Okay, so that's where I said there is no limit to that question that you mentioned. So the $50 is more for the gift. Okay, so the answer, Yeti, would be there is no limit. Okay, and this is on the state of Texas. If anybody here is here in another state, that I cannot answer. Okay, we're answering for Texas. Okay, so then it also says here, oh, okay, let's see here. Buy a home in Texas, we pay your closing costs. So these are like lenders or others that are offering, you know, other types of rebates on brand new homes. So those are builders, okay? They can do that. So they're like reducing, giving them a discount. So, you know, I'm seeing 11,000 rebate, 13,000 rebate. So got to be very careful to read the details. So it's like we get a rebate when we're buying a car, but it's happening during the process, right? So the money we have to come in with is reduced. It's not something we're going to get later. Here's a check, okay? Money. You got it? See how helpful Google is? I've never had anybody ask that question, nor have I ever had to deal with it. I have contributed from my commission, so I call it a contribution. And that's what we typically call them. However, thank you. That's an excellent question. So it clarifies it, that it can be called a rebate. And they are called a rebate. I just don't commonly use it as that. Okay. We just say we're reducing our commission in order to finalize the deal. It's better to get something than nothing. Okay. And sometimes some realtors get really strict about, no, I'm not going to contribute. Well, you're going to get nothing then. I will even ask the lenders to contribute, the title companies to contribute, anybody that's involved. I'll say, we want to close this, we want to get paid, then we all can contribute. So let's all work together as a team and make this transaction close, right? All right, number 23. So it's all about collaborating, working together to help our clients. That's the main thing. It's not just us making a commission. We are getting paid from our clients, okay, from the principal or from the other client, okay, if we're representing a buyer. So the listing agent shares some of that commission, and of course it's disclosed in the listing agreement with the seller that half of the commission or whatever percentage is going to be contributed or shared with the buyer agent representing the buyer in order to get the transaction done. Okay, number 23. Which of the following describes a purchase money mortgage financing arrangement? Vocabulary, purchase money mortgage financing. So if you have difficulty with the financing part, maybe go to the financing section of your prep book or do a lot of questions. Review those vocabulary, okay? So whenever you don't know a word, a term, a phrase, look it up. Don't just go forward and guess and not learn it or understand it. Least case scenario, Google it and find out. Don't go asking somebody else that may not know for sure. I don't have all the answers, so I resort to Google, okay, instead of books and books and books, which we used to do in the past, or encyclopedias, right? Okay, which of the following describes a purchase money mortgage financing arrangement? What kind of financing? Purchase money mortgage. A bank gives a buyer a senior mortgage loan that fully covers the cost of purchasing the property. B, the buyer gives the seller a mortgage and a note as part of the purchase price of the property. C, a land trust holds title to the property while the buyer makes payments, periodic installment payments to the seller. Or D, the seller uses the purchase money obtained from the buyer's mortgage loan to pay the seller's outstanding loan balance. So what is a purchase money mortgage financing arrangement? So type your think about it and type your question number and the letter answer in the chat. So far we have C from Naz. Anyone else? This is your opportunity. Risk it, right? Every day is a risk. Every step we take is a risk, okay? The day we were born, it was a risk. So take a risk now. If you answer incorrectly, then we'll review it. So the answer is not C. What is C? A land trust? No. No. Do you know what a land trust is? If not, go look up the vocabulary or Google it. And you should have a document that has lots and lots of vocabulary. If your prep book doesn't come with vocabulary, there's a lot of free vocabulary online, or some of the prep schools that you go to will provide you with vocabulary, and some old books that I recommend provide vocabulary. All right, so Nas changed it to B. Oh, my eyes are like My contacts are dry. Anybody else besides Naz? And yes, the answer is B. So in a purchase money mortgage financing arrangement, B, the buyer gives the seller a mortgage and a note as part of the purchase price of the money. So a purchase money mortgage financing arrangement. So let's see what the answer here. So the buyer gives the seller a mortgage and a note as part of the purchase price of the property. With a purchase money mortgage, the borrower gives a mortgage and a note to the seller to finance some or all of the purchase price of the property. The seller in this case is said to take back a note or to carry paper on the property. So that might be why you thought of a land trust or a land contract. On a land contract, the seller keeps, okay, the title. The title is not conveyed. Okay, so sometimes that can be risky because so in a purchase money mortgage financing arrangement, the buyer does get the deed, okay, and the title. Well, the title is finally conveyed after the loan is paid off. So they get a deed and a deed of trust. Part of the loan is financed by the owner and part is financed by a bank, or the buyer pays the difference. Banks won't usually do something like that because now the debt to income ratio is going to be higher for that buyer if they are going to be making a payment to the seller and another payment to the lender. So usually the lender wants to be the only lender involved. So here the buyer is going to pay some cash and the rest will be in a promissory note, that's what they're called, between the seller and the borrower, the buyer. Okay, anything else? And it is amortized like most loans. So if the buyer says, hey, I can pay it off in 10 years, however, I want you to amortize it for 30. So that means at the end of 10 years, they can pay off the loan, but they're going to have smaller payments. It's going to be stretched out like it was being paid in 30 years. So in essence, there's like a balloon payment after 10 years, but they're still having a small enough payment that they can afford based on their current income and expenses. So if it doesn't say here whether it's amortized 30 years or not, if it doesn't say it is amortized for 30 years. Okay, so let me see if it says anything else. So keep in mind that whenever there's a loan in Texas, we have a promissory note, okay, and the mortgage. The mortgage is the deed of trust. It's a collateral. It's the instrument that specifies what happens if they default or if the lender sells the loan, because a bank or even an owner can sell the note. A promissory note is not recorded. It is between the owner and the buyer. And that has the financing terms, okay? It's a 30-year mortgage with 10% interest, and this is the monthly payment of principal and interest. The taxes and insurance will be included, or you will pay them on the side, okay, when they are due. So the promissory note is a note that's like when in the old days we'd say, hey, I promise to pay you the $50 you loan me at $10 a month, okay, with no interest, or I'll contribute an additional $10 interest, okay? It gives the terms of how that money is going to be repaid. The mortgage is the collateral, so they could say, okay, I will use my bicycle as a collateral, okay? I'll use my car as a collateral, so that if that promissory note is not paid, then the seller has ramifications, right, in order to get that money. So that way, you know, they're protected because they're like a bank. Got it? So the answer here was B, right? And Nas answered C. A land trust holds title to the property while the buyer makes periodic installment payments. So the let me rephrase that. I made a wrong comment. Okay. A land contract is like an owner financing transaction. A land trust, let's say you want to protect your interest and have like an LLC, and then you don't want to have the property under your name because you're an investor and you have multiple properties. So we put them under a land trust with the name of the address of the property. So whenever there's a trust, there's going to be three parties, right? The owner, the trustor, the trustee, and the beneficiary. So in the trust, the beneficiary is going to be the real owner. And the trustor could be the LLC. The trustee could be someone that they trust, okay, to represent them and take instructions on what to do with that loan, okay, or that trust. When individuals are building their trust, right, for life, okay, then they designate what they want to happen in that trust. But this has to do with one particular property on this land trust. And as an investor, I was an investor. I would put each of my properties on a land trust. So I had a trustor, which was my LLC. The trustee was an individual that I trusted to follow my direction. And then I was the beneficiary. Okay. So that's called multiple asset protection, multiple level of asset protection in case you have multiple properties and somebody wants to sue you. You have apartments, you have houses, and people are so happy. They're going to have to pay an attorney money to find out who the real owner of that property is. Okay, so that's different. That's not for a land trust. That would be a land contract, which is owner financing. Okay, seller financing contract, but the land contract does not convey the title. Okay, does not convey the deed. The deed is held by the owner until the property is paid for. So it's more challenging to have something like that. And it's harder to try to foreclose on something while the owner actually still owns it. And then the owner conveys the title and the deed once the note is paid, the promissory note. So go back and review the definition of what a land trust is and purchase money mortgage. It's a type of financing. So in this case, they're paying some cash and offering a promissory note, okay, with the mortgage. So seller carries some of it. Okay, so they have a mortgage between the seller and the borrower, and they pay cash, and they have the promissory note. How am I going to pay this? In what terms and what interest payments? And when do I pay the property taxes and the insurance? Is that included in the payment, or do I have to pay those on my own? Most of the time, sellers may want to be responsible to pay for them to make sure they get paid. All right, that was the long, drawn out, multiple explanation, because I think of other things as I'm talking out loud. 7. So thank you for your patience and understanding. If for some reason you get confused, please let me know. All right, number 24. All right. A homeowner borrows money from a lender and gives the lender a mortgage on the property as collateral for the loan. Okay, so the mortgage is like a deed of trust. In Texas, we have deed of trust. It's equivalent to a mortgage in other states. And ours in Texas is called a deed of trust because we have a non-judicial type of foreclosure. We don't have to go to the judge and get permission to sell it. Okay. So a homeowner borrows money from a lender, a bank, a mortgage broker, and gives or it could be a hard money lender, and gives the lender a mortgage on the property as collateral for the loan. The homeowner retains title to the property. This is an example of A, intermediation, B, forfeiture, C, hypothecation, or D, subordination. So those are all vocabulary there. And I might have said something incorrectly a moment ago when talking about the homeowner finance. Oh, no, not the homeowner finance, with the land contract. Okay, so when the buyer is getting money from a lender, they give back a mortgage, right? That's the collateral for the property. And that is called a deed of trust. It has all the instructions as to what happens if the buyer defaults, and it names the property on there. So the lender will get the property back. That's the collateral, the mortgage that's tied to the property. The homeowner retains title to the property. So the title is conveyed, but not, and the mortgage is kept with the is the collateral for the lender. So what is that answer? So I've got 24C, C, yes, 24C, hypothecation. So when you know those vocabulary, right, it'll help you get that. Intermediation, no, right? That's like if we have both transactions, both sides of a transaction under the broker, right? We're the intermediary, the broker is the intermediary. Forfeiture, you're forfeiting on the buyer or the sell. Subordination is there's more than one loan, so the first loan is going to allow to accept the second one. So with the hypothecation, the process of securing a loan by pledging a property without giving up ownership of the property is called hypothecation. So they have ownership of the property, right? They can enjoy, use, and sell it and get a loan if there's enough equity. However, they can lose it if they don't make the mortgage payments. All right. Okay, very good. So, oh, I think that was our last question, right? Yes, actually, I went one over. Okay, any questions on the national here? We've had a long hour and 30 minutes or something on national questions. And that's what happens when I get to answer questions that come up during the questions. Okay, so what did Yeti say here? Okay, thank you so much for elaborating. I could not remember of the questions and options, but those answers are my 50-50. Yeah, so it's going to be that there was no limit, okay, on the rebate. The option of $50, that's a gift, okay? We're getting a referral, or, to somebody else, we can give a $50 gift. No cash. Okay, not $50 cash. It has to be a gift card. All right. Okay. So any questions on the national? And thank you for hanging in there. And hopefully this will help you prepare it. And you may want to watch it again and again and go over and review questions over and over until you get 100 on the questions. Getting a 70 on practice tests is not good enough. Okay, because the actual exams are typically harder. Sometimes they're easy. You may be lucky and get an easy one. But for the most part, they are harder, and you may get questions that you've never seen before, or something you've never heard of. They're expecting common sense. Okay. All right, so we're going to start out with number 1326 on the Texas state. So anybody that's here from national, you're more than welcome to stay. However, we are now reviewing Texas specific questions. And test number 13 has to do with standards of conduct in brokerage services. You see how it's under Section 5, Texas State Level Practice Tests. So that is standards of conduct of brokerage services. So keep that in mind when we're reviewing the questions. And we're starting with number 26. Okay, so Texas. Questions. Okay, starting with 1326. And these are continued from the last session that I had on Texas, which was on, it's in the description. So I did that on September the 13th. You can go and watch that, and it'll start with number 25. It'll end with number 25. Because I do them consecutively in case you're using the book. And for anyone that just came in later, and if you've never attended before, the book that I am using is this blue book by Stephen Metling and his son, Ryan Metling, and 2 other authors, Cusick and Hamilton, Texas Real Estate License Exam. It's called All-in-One Review and Testing. It includes the answers to all the questions. It has, 10 exams or tests for national and 6 of them for state. And then it gives you a review, okay, on every subject that you studied for national law and for Texas state. And it has a math section also, and gives you ideas on how to study, prepare for your exam. Okay, so let's get back. So excellent books. Okay, I only use what I believe in and agree with, and I have permission to use the books from the author. There's a disclosure in the description. Okay, number 26. What happened to Texas State questions doing with brokerage services? Advertising, including internet advertising, may not mislead the public. We can never, never, never mislead the public. Be honest. It's the best thing to do, and practice honesty and ethics. In that regard, which of the following would be considered deceptive? A website with an excessive number of listings on it. B, an ad advertised stating that the sales agent ran the business like real estate professionals are supposed to. C, a directional sign to an open house that was pointed in the wrong direction. Or D, an ad directed to at buyers for exclusive representation that stated the buyer may not have to pay the commission. So think about this and type your answer. Okay, well, Nas has already typed his answer. Very good. I'll give the rest of you a chance. Anybody else? Type your answer in the chat, the question number and the letter answer. All right, so I guess it's only going to be Ness. Come on, going once, going twice, 3 times. So let's see. Yeti says C. The answer is actually B. So in red, which of the following would be considered deceptive. So which one is not a true statement or it is misleading? B, an ad stating that the sales agent ran the business like real estate professionals are supposed to. Well, we are independent contractors. We run the business however we know how to run a business, or we learn how to do it as long as we follow the state laws and the procedures of our brokerage, right? So our policies and procedures from the brokerage and the state laws, and following Texas Real Estate Commission rules, conditions, and also the local board may have sometimes certain things that we cannot include in our MLS in order to be uploaded onto the local multiple listing service. So almost everybody has some kind of condition. All right, so be prepared for that. So the answer is an ad stating, oh, we ran the business like real estate professionals are supposed to. Well, not everybody knows how we're supposed to. So ads are deceptive that lead the public to believe a sales agent is running the business. Brokers run the business, right? A website, because we hang our license under a broker. So all our clients belong to the broker unless we are a broker, okay? Which it didn't point out on that. But a sales agent is under a broker. So the business is run under the brokerage. So we have to abide by the policies and procedures of our broker. We can run the business and manage it however else we want to, as long as it follows all the rules and the legalities. Okay, however, it has to abide by the brokerage that we hang our license under. So a website with excessive listings is simply a big website. And we can have all the websites, okay, through an IDX. If you're not sure what that is, look it up. We have access to all the properties on the MLS, and they can show up on our website, okay? Because a buyer can search for anything and everything, just like on Zillow, Realtor.com, Trulia, Homes.com, all these other websites. So we can have those on our website. That doesn't mean they belong to us. It'll say on the bottom, brokered by so-and-so. Now, if we happen to have our own 25 listings, 50 listings, 100 listings, of course, we're going to put them all out there, right? Because we're representing all those principals, all those clients. So we're not limited to a number of listings. And then what else does it say here? So that doesn't deceive the public. Somebody might be misled thinking that we own all those listings. They've got to look at the detail, okay? It'll see brokered by so-and-so. It's like they go to the MLS, they go to all those other websites I just mentioned. It'll say on there who it's brokered by. They go to our website, we have access to have all those listings included on our website. And then another thing is an ad regarding compensation is not deceptive if it is true. As I mentioned, always be honest and sincere and stay ethical, which is in this case could very possibly be. Okay, so if we're mentioning that we will provide a rebate of our commission or something like that on the listing agreement, I probably wouldn't put that, okay, because people are always going to ask for more. Not always, but they can. And so, but that is an ad representing compensation. It is not deceptive whenever it is true. If we offer it to one, we must offer it to all. Okay, just same with lenders. And directional signs are not advertising. They're just an arrow, and it could have been put in the wrong direction. Okay, so that's why that one doesn't. Okay, it's a directional sign. It has an arrow. It's not advertising the property. It's saying it's an open house, go in this direction. If it's pointed the wrong direction, okay, you're going to go the wrong way. And so then buyers will turn around, they'll figure it out, or they'll put the address on Google Maps, right? Or Waze or some other, or Apple Map or whatever. I use Google Maps. Okay, so be very careful with what the words say. So a website with excessive number of listings, No, that is not deceptive because the MLS is going to have tons of them. Okay, that's internet advertising. An ad stating the sales agent ran the business like a real estate professional. Well, again, yes, we run the business, but under the rules and regulations, policies, and procedures of our brokerage, unless we are a single independent broker. In some states, a broker could be considered the sales agent. In Texas, a broker here is considered a principal broker in another state. So they're the one, they're the umbrella, okay, of where we hang our license. We are the sales agent if we don't have a broker's when we don't have a broker's license. So we're running the business like the brokerage because they're responsible for us. Directional sign, no, it's just an arrow. Okay. Now, some directional signs will advertise, the agency. Okay. But it's not advertising like on the internet. And then an ad directed at buyers for exclusive representation that stated the buyer may not have to pay commission. Yes, we can do that, right? We can decide. Now, the broker may say you have to charge a minimum of 2% or 1%, as long as you have not covered the cap that is due to the brokerage. Once we cover our cap, that means we've already sold enough real estate that we don't owe the brokerage any more money. So then, because different brokerages, some have, 10,000, 12,000, 16,000, 21,000, that has to be paid to the brokerage. So we do an 80-20 split or a 70-30 split or 60-40 split. The larger percentage is ours. And once we reach that cap of contributing the amount to the broker, which requires, a certain number of millions of properties, 2.6 million, 2 million, anything we sell over that, then we get 100%. Then we can say, yeah, we have a rebate of this much, or we're going to give you you won't be charged a commission. Now, some buyer agents will say that because typically the seller pays the commission. But what if the seller isn't going to pay the commission because the seller is a for sale by owner? Ouch. That would be a bad situation, right? But if the buyer wants to do, what do you call it? When you go to a court and you do pro bono type of transactions, you're doing it for free. Hey, that's up to the realtor, right? As long as it's approved by the broker or they have already capped. So there's conditions. Okay, so which one would be considered deceptive? Okay, so it was 1326B. Did I type the answer on here? So there's a lot that goes into the question and the answer, not just, reading it. Well, sometimes some just want to read the question and the answer because they might know the material a little bit better. On my channel, I do more explanations. So as I mentioned, if something doesn't work for you, find a YouTube channel that does meet your needs. You have a choice. Okay. And in the future, I may do some where I just read the question, the answer, and explain the answer, and boom, go to the next one and go much faster. Many YouTube channels, that's how they do it. I think I'm one of the few that goes live and gives an opportunity of you to participate. That's the other thing, that mine are live. Most others are not, unless you're paying to a school and then they show it on YouTube. All right, number 27. A residential market has fallen on hard times. What kind of market? Residential. I forgot to show the answer. To make more deals with buyers, a licensee advertises to offer a rebate portion of the commission to any buyer in order to make prospective purchases excuse me, more attractive. Given this scenario, which of the following applies? Excuse me. When you're doing live events and talking a lot, you have to be careful not to take a lot of air in without moisturizing yourself because it'll dry up. Okay. So given the scenario, which of the following applies? Okay, residential market has fallen on hard times. To make more deals, the licensees advertises and off a rebate portion of the commission to any buyer in order to make prospective purchases more attractive. So does this apply? A, the ad must disclose that the rebate is subject to the seller's approval. B, the rebate must be made in cash before closing. C, the ad must identify a dollar amount of the rebate. Or D, the licensee may not make this offer as rebates are illegal. I'm sorry, yeah, or not legal. So we just talked about rebates, right? Sometimes a past question, but that was on the national portion. A past question could help you answer a future question. So we've got 1327A. So yes, disclose, 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 right? Because there's two parties to a transaction, right? Sellers and buyers. All right, so I've got Nas and Yeti saying 1327A. Anyone else? There's quite a few on you here, so take a risk. Yes, the answer is A. The ad must disclose that the rebate is subject to seller's approval, right? Because the seller typically contributes a commission, right? So if the buyer's going to say, oh, no, I am not going to charge any commission, well, it usually comes from the seller. Okay, so residential market fell on hard times. To make more deals with buyers, the licensee advertises an offer to rebate portion of their commission to any buyer. Okay, so if the buyer doesn't represent the seller, then are they going to take it out of their pocket? And is it going to be part of the commission that the seller is paying for to the listing brokerage? More than likely, right? That's where the majority of the commissions come from the brokerage, the money, the commission that is paid from the seller to the brokerage, and then the brokerage listing agent shares with the other broker. So if the buyer agent is advertising that and the seller is not aware, the seller may not like that. So it has to be disclosed, okay, by both parties, to both parties. So 1327A. Do you all understand that? In any transaction between buyers and sellers, there has to be approval. Now, if we're going to be able to, let's say, have both realtors under the same brokerage, both clients have to approve. Some clients don't like the fact that both realtors are going to be under the same umbrella because they think the realtors collaborate and negotiate between themselves instead of going through the client and making the decision, then going to we're not friends with the realtors during a transaction. We're there to represent our client, our principal, be it the seller or be it the buyer. And everything is decided from the seller. Our goal is to, like mediate and make this work and help our clients come to our mutual agreement. But between buyer and agent and seller agent, we don't make decisions. Decisions are made by our clients. We discuss the options and then go back to our clients and come up with a decision. So very good. Number 28. So if at any point I end up confusing you, please stop me, okay? Number 28. And again, these questions have to do with brokerage services. So anybody that maybe just came in. All right, I think that's going to do it. Okay. A sales agent advertises, so what? A sales agent, right? Not a broker, sales agent advertises that he or she consummates more closings in less time than any other volume agent in the market. The ad lists 4 such competitors listed in rank order of the prior year's sales volume. Which of the following applies to this advertisement? Remember, there has to be a disclosure and factual information and whether it's allowed or not, right? So with that said, so this ad is A, the ad is illegal since it ranks orders direct competitors. B, the ad is illegal unless it discloses what the ranking is based on and the source of the data. C, the ad is acceptable provided the parties on the list approve of the ad. Or D, it is deceptive since sales volume is not relevant to an agent's proficiency. So think about it. When you see what's happening in the market, who's top realtors, who typically provides data? Do we do it as individual? Sales, and that's a sales agent, okay? Not a broker. Brokers have more information. However, there's a lot of information online by many data or statistical companies, okay? Real estate companies, news companies, other types of companies. So type your answer in the chat, question number and the letter answer. So far we have B. Anybody else? And if you see me looking at 3 different monitors, I have 3 monitors. The one in front of me, the questions on the left, YouTube and Facebook on the right, where I'm typing answers. So that's why I move my face around. All right, so Yeti and Nas say B. Yes, that is correct. The ad is legal unless it discloses what ranking is based on and the source of the data. So it could be data from NAR, which is a National Association of Realtors, and they could publish things like this. Others will select, top realtors of the year in certain agencies or brokerages. So it has to come from a third party that does statistical data, and they typically do it for the year. Within the company, within the brokerage, they can do it per month. But usually data like that will say, top realtors in the area for the year. So it's just statistical information gathered by a third party on either properties that have been sold or number of properties that have been listed and that type of thing. So if you're a competitive individual, you may keep track of that. Okay, number 29. Which of the following is true regarding office regulations for brokers? Okay, regarding, again, this has to do with brokerage services. Which of the following is true regarding office regulations for brokerages or for brokers? A, in-state resident brokers must maintain a fixed office location. B, additional branches need not have an office license provided it is within the same market area. C, non-resident brokers must maintain an in-state office. Or D, if a broker changes locations, the broker's license transfers to the new office as is. Wow, Yeti is on the ball. Okay, how about Nas? Who else? So who else was here that was here at the beginning? Oh, it was Yeti, because you're preparing for the state for next week. All right, the answer is A. And which is true regarding office regulations for brokers in Texas, okay? In-state resident brokers must maintain a fixed office location. Now you might ask, well, how about virtual companies? We do have a local address. Okay, so we do have a local address that we can use on all our records. Like for me, we're at EXP, our local office is an in-state office in Austin. Okay, so that's where our main address is, even though we are a cloud-based company. Some realtors or that are brokers under our brokerage, EXP, might have their own office and they can use that, but we use the brokerage main address, which is in Austin. So that is important. The other ones, additional branches need not have an office license, provided it is within the same market area. They'll use the same license. Non-resident brokers must maintain an in-state office. Yes. If a broker changes locations, the broker's license transfers to the new office as is. So we do report it to TREC. Okay. So this would not be as is, so that has to be reported. So the only true one is in-state resident. Additional branches, okay, do have to have within the same market area if they don't want to post a new license. Some laws did change. And then non-resident brokers must maintain an in-state. No, so there are some brokers that are from other states. They don't have to have an office here, okay? But they can have a license, okay, and do business in our state. And then if a broker changes locations, the broker's license transfers. No, we have to inform TREC that our address has changed. If we got married, divorced, we update that. So anything we need to change, we must update TREC. It doesn't automatically happen. All right, number 30. But to practice here, we have an in-state office, okay? In-state resident brokers must maintain a fixed office location, even when it's a virtual company. And nowadays, there's quite a few virtual companies. I mean, not as many as brick and mortar companies, if you're wondering what the difference. Brick and mortar is when you go to an office building. Virtual office, it's a cloud-based company, is we don't go to an official office every day. Wow, I'm having a hard time with this one. Let's see here. Okay, there we go. Number 30. A buyer signs an offer to purchase a property. At this juncture, the licensee is required to disclose which of the following. Okay, so buyer signs an offer. And that gets presented right to the sellers. So at this point, the licensee is required to disclose which of the following. A, that the price agreed to was developed without coercion or market collusion. B, that the buyer should get the insurance or a title abstract examination of an attorney by an attorney. Or C, that TREC requires the buyer to obtain a property inspection. Or D, that the buyer must be pre-approved to satisfy the contract's financing contingencies. Okay, so, and TREC is what? Texas Real Estate Commission. So, vocabularies, you've got coercion, juncture, title abstract examination, property inspection, pre-approved, contingencies, okay? So when the buyer signs an offer, what happens at that point? The price agreed was to develop without coercion or market collusion. So that was between the seller and the brokerage, right? B, that the buyer should get title insurance or title abstract examined by an attorney. C, that TREC requires the buyer to obtain a property inspection. or D, that the buyer must be pre-approved to satisfy the contract's financing contingencies? So which one do you think it would be? Whenever a buyer is purchasing a house, there are certain things that are going to be required, right? Because most of them are going to get a loan. It is not C. So take another attempt, Nas. TREP does not require inspections. That's between a buyer and a seller. And that is an option for the buyer, so that they are well aware of the condition of what they are purchasing based on a professional licensed home inspector. So it is not C. Take another attempt. Yes, no, maybe so. All right, the answer here is yes, very good, B. The buyer should get a title insurance or title abstract examination by an attorney, because that's who does them. So anytime a buyer is going to buy, we make recommendations. Okay, we advise them that they to get a home inspection so that they know the condition of what they're buying, to get title insurance so that they are protected in case there's an error on the title information or the title of the property, names of the sellers, liens that are on the property, mechanical liens, judgments, anything like that that were maybe missed. The title insurance, kind of like health insurance, auto insurance, home insurance, is to protect for damage or loss. So title insurance protects the buyer for any damage or loss caused by a discrepancy on the title. And that's done by title insurance companies' attorneys. Okay. If there's already one in existence, they probably want to ask for a new one. Okay, because something could have changed. Because the title policy can be done for just the period that the seller owned the property, or it can be done for the whole history of ownership on that particular property. So the answer with B. If you're not sure about title insurance, go look up title insurance and title abstract examination. So the title abstract is the search, okay, that the history of the property that was found during searching the title ownership, okay, of that property, the owners. So they find out whether the owners are the actual owners by getting social security numbers, getting their names, their addresses. They've got to verify all that, and how many years did they own it, that they have any liens, any loans, or the mechanical liens, who were the prior owners, if they're going to do a more extended title search. If it's a specific title search, it'll be only on that one particular property. The owner is not including, their history of knowing all the other ownerships, okay, of the property. And that a lot of times happen if it's the lender that owns the property, there's a foreclosure, there's an administrator because of probate, or there's an executor because of an estate or a trust. Okay, any questions on what we just reviewed? We did 5 Texas questions, and that's all we're doing. We typically have less Texas questions because you only have 40 in the state of Texas. And today we were doing standards of conduct of brokerage service. If you want to review prior questions, look for the other Texas. Typically I do national on one video and Texas on another. Today I did both. In last year or something, I used to do both all the time, but then, and vocabulary. and it got to be very long because I couldn't take enough time to explain, okay, all the questions and the answers. So I divided it into either vocabulary, national, or Texas. Today I did both because I hadn't done national in quite a while. Okay. So if no further questions, hey, thank you so much for attending YouTube Agent Prep with Wow Lillie Handy's prep class, helping you prepare for your real estate exam for either national exam or the Texas state exam. If this is your first time to my channel, hey, remember to tap that subscribe button and tap the like button to send some love, some support, encouraging me to continue doing this. And you can write a comment if is there anything in particular that you would like me to do, and in addition, like maybe math or something else, because I haven't done a lot of math. There are other channels like Prep Agent that does a lot of math. He's been doing this for quite a few years on YouTube. I've been doing it since the end of 2020, and I used to do it on Facebook Live prior to that. And and click the bell so you're the first to get notified anytime I go live or we upload a short, okay, on a video, like doing one question, one vocabulary at a time. And I've also started uploading videos about how to get your business going, how I got started, how to get listings, how to market properties, you know, and which all of you are going to need when you first get started. So I've uploaded 3 videos, one a week, on helping give you experience of how I got started in my business. How did I get 25 listings in the first 3 months? How did I sell 103 properties? Different methods to get buyers. So I have begun adding training types of videos to YouTube Agent Prep because it helps students and it helps beginning realtors and other realtors. Hi, Roque. So let's see here. Nas says, thank you so much. God, I can't, what? Thank you. When will we go live again? Hopefully next week. I'm getting back to doing it again every week. And then, oh my God, I came so late. Hey, Roque, that's okay. All right. I didn't notify you guys. I was starting at 5, but the internet reception is terrible at 5 o'clock. And we were having so many interruptions. So I did it later today around 7 o'clock. So I may end up changing the time to either 6 or 7 o'clock to avoid everybody coming home and getting on the internet and getting disrupted. So, hey, Roque, you can go and watch the replay, but I know it's good to attend so you can participate. What time do you usually give? Oh, yes. And I haven't done any math, but I could do some. So I was going on at 5, yet the internet at that time is extremely busy. And I've had so many interruptions. And today was stormy. So I decided to start later at 7. And you know what? It worked out great. No internet interruptions of getting disconnected. I was getting dropped so many times. When you watch some of my other videos from the last 2 or 3 months, play it at a higher speed. Okay, you know what you can do. All right, you have the choice to speed it up and slow it down. And let's see, are you connected to the modem via cable? Yes, I am. I have the highest speed internet that Spectrum can provide me. And so I have a direct connect. And they say, oh, weather and the demand doesn't impact it. It does. Okay, so I've tried everything. I went and I pay a lot more so that I can have the highest speed. And they've come and changed my modem because it was a problem with their modem at first. And I checked the speeds, but at 5 o'clock, oh my gosh, you know what? Kids are at home, families are home from work, more people on the phone, more people on the computers, on the TV, all that is Wi-Fi, right? Even though I have a direct connect, but it's with the internet providers. So there's more demand than the source that we're being provided. So Yes, but thank you for mentioning that, okay? Because I did have to get Spectrum to come, but I have noticed from experience, 5 o'clock, bad time, okay? So I'm either going to do 6 or 7 p.m. from now on, okay? And I'll update my postings when I invite people on Instagram, I mean on Messenger. If you're not on one of my messenger group, I have like Texas group, national group, RGV group, and San Antonio. If you're not in one of those groups, I sent a reminder today, but it was like at 6:50. And if you're not on that, let me know. Send me a message on Messenger so I can add you to one of the groups, and let me know if you're in Texas or you're in another state. Okay. And hey, you all, I love doing this. And whatever you do, be persistent, have a regular schedule of studying. Study every day, even if it's for 30 minutes, study vocabulary. Okay. You've got to learn the vocabulary over and over and over so that you understand what they're asking in the questions. There's a lot of vocabulary in the question and in the answers. And I try to take time to point those out and point out other keywords like must, never, always, that could trigger you to select either the right answer or the wrong answer. And then study lots and lots of questions, okay? Repeat them, the same questions over and over and over until you get 100%. Don't be afraid that, oh my gosh, I have the same book, I'm only studying the same questions. That's okay. Every time you do them, you'll learn it better. Every time I do this, something else triggers and a light bulb comes up. So let's see. I think I sent a request for Texas, but yes, definitely will do. Oh, okay. So you're in Texas. Let me check and see if you're on my messenger group for Texas. Or let me search for you, Roque. Roque Rodriguez. You live in San Antonio, Roque? Because I have one here. You're not in a group, but it says Roque Rodriguez from San Antonio. Oh, and we're not friends. Oh, so you asked me for a request, and you know what? I get so many spam requests. So I'll look your name up. Okay, I'm looking up your profile here to see if I can find you and add you to the San Antonio group. Oh, you're in El Paso. Okay, that's the wrong one. Okay, can you ask for the request now and see if I can get it? Let's see, there's San Antonio, San Antonio. Gosh, there's several of you in San Antonio. But yours is in, okay. Send me another request, and if not, I'll look you up. But everybody, hey, thank you for your patience. Thanks for hanging in there. And one thing you have to do also is get your mindset that you believe that you pass this exam. Affirm, I passed, I passed, I passed. You've got to believe it. Okay. And don't give up. It's okay to be nervous and be scared. We all go through that, including me. Okay. So that is normal. And if you, for some reason, don't pass it the first time, it's okay. If you know, and you can go back and review that and study it and study better, create a good schedule so that you are better prepared. All you need is a 70. You don't have to get 100. But on your practice tests, get hundreds, okay? That's what I did in order to help me pass. All right, so let's see, El Paso. Okay, so until next time, this is Wild Lily Handy Dominguez coming to you from San Antonio, Texas, to help you prepare to pass your real estate exam for Texas or your national portion of anywhere else in the US. Until next time, catch you all later. Love ya.